Fine.
Good morning. Welcome to Stock Market Today, Tuesday, December 17th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. A lot of the content on this show comes out of that email. We also give you stock ideas every day for you to consider in your inbox before the market opens. U.S. equities finish higher in Monday's trading. Major indices again ending near all-time highs. At the sector level, energy, utilities, and healthcare outperformed, while industrials, mostly led by Boeing, were the only group to move lower on the day. Treasuries were weaker with the curve steepening. The dollar was stronger versus the yen, but weaker on the euro cross. Gold finished little changed, and WTI crude settled up 20 basis points. As we get to the desk this morning, it's a bit of a mixed picture in the futures market after Asian markets were mostly higher overnight. China, South Korea, and Taiwan all seeing strong gains. European markets are trading lower. Treasuries are stronger with the curve flattening. The dollar is little changed against the euro and the yen. Gold up 20 bips and WTI crude adding 10 basis points on the day. And as we look at the structure of the S&P 500, not a lot to change here day to day. Record highs, again, for the index. Near-term support in the 3050 to 3100 level. The break from the range that we have been talking about still targets 3200. And I realize that we're only 9 points away, but we pretty much hit it yesterday. We came within 2 points of hitting this number that we've had out there for a while. So I left this one out here to kind of pat myself on the back a little bit. No, not really. That's not my style. 3,200 is still the area where we see the market going, and then we'll assess the trends from there. But if early stage, I think that what you see is a bullish trend in the equity market confirmed by momentum. If there was one thing I was going to worry about, it would be this small divergence. I mentioned it yesterday. It's in place again today. What you have here is the S&P 500 making higher highs, while the RSI, as of now, makes a lower high. This is a small divergence that we want to be aware of. Does it mean we run for the hills? No, it's just something we pay attention to. At the same time, Chaikin money flow is bullish. So the indicators are confirming price trend. Maybe we're a little bit ahead of ourselves from a momentum standpoint. Maybe that helps you calibrate how aggressive you want to be with your new bullish ideas. What I think you should be doing is focusing on leading stocks and leading areas of the market and managing your risk. You should be moving your stops up on your stocks that are moving higher. Maybe you're just a little less aggressive with new ideas. And don't forget that this is the final full week of trading for the year. After this, the way the holiday falls, you're essentially looking at kind of 2 broken weeks with the Christmas holiday falling on a Wednesday and the New Year's holiday falling on a Wednesday. You basically have 2 busted weeks. A lot of people will be taking time off. I would expect liquidity to be very, very thin over the course of the 2 weeks after this week. Let's take a look at our market in a minute now. What are we writing about in our note to Chaikin Analytics clients today? Well, new highs for the SPYs and the Qs. REITs break down on a relative basis to go with a bearish rating. And the reason this is important is because I really think it highlights having a process, the process that we have, because we liked REITs throughout most of 2019. They were outperforming. Then they started to break down. Now they're completely underperforming and bearish, right? So we don't become dogmatics just because we liked them 2 months ago or 3 months ago. Doesn't mean we continue to like them in the face of conflicting evidence. I'm going to show you that conflicting evidence here today. Technology continues to be the best relative sector, and financials hold the breakout versus the index. Futures point to a slightly lower open here today. Major indices from a power bar perspective, all improving. Dow 6-3, bulls to bears after adding 34 basis points yesterday. S&P 500 131 to 78 after moving higher, 68 basis points to the good. The NASDAQ up nearly 1%, 27 to 16 bulls to bears. Small caps in line with the S&P 500, 741 to 242 bulls to bears, solidly positive. Bonds down, tick, sending yields higher. And energy had a nice day yesterday, up 1.34%. And I'm going to show you an area of the energy complex today that's starting to show some signs of positivity. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. Stock of the day today, Vanda Pharma. Vanda is an interesting name here because this is kind of turning the quarter. VNDA closed at 1701, up 1.67% yesterday. Very bullish power gauge rating due to attractive financial metrics, very strong earnings performance, very strong price volume activity, some negative expert activity, but 20 factors, 5 in each of these 4 categories, give us that very bullish rating. We've been talking about biotech. We've been talking about healthcare. We looked at pharma last week. We've looked at services. Strong trend, strong industry group making the turn. Very bullish stock, outperforming the market model in agreement. Mixed money flow, but oversold. Weight of the evidence supports taking a look at Vanda. And I'm going to say taking a look and not just automatically adding it, because as with all biotechs, I think you need to be aware of the potential catalysts down the pipe. What are some of the announcements? What are the drugs they have in development? What is going on or could potentially happen over the next 6 months that could move this stock 50, 60% in a day? Because it happens in biotechs all the time. What I would say with Vanda is there's enough here that leads me to believe that looking into their pipeline is a good use of time. Take a look at Vanda, do some extra work there. Our sector tracker now, looking at the movement of the major sectors over the last 5 days. Tech at the top of the list is encouraging. It's over 20% of the S&P 500. You've heard me talk about it. Energy, listen, we can't argue with the fact that energy is showing up at the top of this list lately. We can't argue with the fact that energy's had some good days lately. We can't argue with the fact that oil is knocking on the door of $60. The model is still bearish, but we're starting to see some signs of life. We're going to take a look in a little while. Healthcare, another area of the market that we like. Utes had a great day yesterday. I honestly don't know why. Financials continue to be a leading area of the market where we want to be focused. Discretionary materials, industrials are middle of the road. Kind of separate out industrials a little bit if you're going to do some work there. Remember, Boeing is a big weight. Within the XLI, Boeing is nearly 8% of the ETF. And it's under pressure because of the 737 MAX. So just keep that in mind. Real estate, staples, comms at the bottom of the list. Those are your defensive areas of the market. So the market's being led higher by the risk-on type cyclical areas of the market, largely in line with our views and what we've been writing about and talking about for the past couple of months. The areas of the market from a sector standpoint that we like the most are technology, healthcare, and financials. Those are 3 sectors, all with very bullish or bullish Chaikin Power Gauge ETF ratings that are outperforming the S&P 500, where we think outperformance is likely to continue. So that's where we're focused for our long ideas right now. But obviously, as always, we take a look at all areas of the market, especially when things start to change. And oil and gas exploration and production services, so the E&P names, after spending the past 6 months underperforming the S&P 500 by over 28%, now have a bullish power bar ratio, meaning there are more stocks with bullish or very bullish ratings in our model than bearish stocks or very bearish ratings. 14-8. It's ranked number 13 of 21 subsectors, and it's moved up 5 slots over the past week. Some of the names there where you may want to think about doing some work: Holly Frontier, Phillips 66, and Valero, all with very bullish Chaikin Power Gauge ratings. What I will say is the group is not there yet. But honestly, this is the first time I've had something positive to say within the context of our Chaikin Power Gauge model on the energy complex in months, right? We looked at services yesterday, still a disaster, still skewed in favor of the bears. I think it's like 13-3 or 12-3. But here's an area of the market, E&P, again, a little more exposed to the price of oil, which has been moving higher. E&P now has a bullish ratio. That's a change, folks. Now, the ETF's not there yet. Still a bearish ETF rating. Still underperforming the market. Still bearish money flow. Trend turns strong as we break above the long-term trend line. But this has my attention. It doesn't have my attention to the point where I would go out and buy XOP, but it has my attention that something may be changing within the energy complex. And I want to start to sit up and take notice. This is the beauty of having a process, because if you have a process that's repeatable, you see these changes pretty quickly. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Cabot Oil and Gas. Well, there's an energy name. COG up with oil yesterday. UAA, the apparel and footwear space, was strong yesterday, and UAA went along for the ride. That's Under Armour, 4.6% to the positive. Mosaic, no real news there to send that stock higher by 4.5%. Western Digital caught an upgrade from Susquehanna, a Philadelphia-based company, also where Chaikin Analytics is based. Stock adds 4% on the day. CTVA, no rating on that name, up 4%. On the loser side of the board, International Flavors and Foods announced that they are buying a division of DuPont. Well, that led to a downgrade by Citi and investors taking 10% out of the stock. There's Boeing. They're going to halt production temporarily of the 737 MAX, take 4.3% out of the stock. Newell, no real news there to take that stock lower by 4%. Abiomed. Abiomed, the only real news I see is that they enrolled their first patient in one of their trials. I don't know why that would send the stock lower. I don't think it's that particular data point that sent the stock lower. It's a normally volatile stock. But regardless, the why is not really what we get too wrapped up in. The stock was down 3% yesterday. Keys, bullish stock, no news. Stock lower by 2.5% on the day. Let's take a look now. Here's what we're talking about in REIT land, right? We've liked the REITs. The REITs were outperforming from October of 2018 until about August, September 2019. Nice steady trend. And all the while, our model had a pretty bullish view. There were more bullish stocks than bearish stocks. It was outperforming. A lot of bullish names there where we could look for opportunities. But as the saying goes, when the facts change, I change my mind. What do? Facts have changed for real estate. XLRE relative to SPY now breaking down. Broke through the 200-day moving average in this uptrend line. Broke through support and continues to head lower. All the while, the RSI of the ratio is heading lower, a series of lower highs, as it shifts to bearish ranges. And on an absolute basis, we've broken the uptrend line. The ETF rating in Chaikin Analytics for XLRE is now bearish. The ratio of bearish stocks to bullish stocks is skewed towards the bears by greater than 5-1. 17 bearish or very bearish stocks for 3 bullish or very bullish stocks. We're not dogmatic. We've liked real estate. Then we turned cautious. Now we don't like it. The only way that you can not be dogmatic, in my view, is to have a steady process that's unbiased. And that's what I'm doing here each and every day. Simple and repeatable. Real estate, now an area of the market where we want to avoid the bulls and maybe look for bearish ideas. Complete opposite side of that spectrum is tech, which we've loved and continue to love. And why will we continue to love it? Well, first, absolute and relative trends are outstanding. Here we are relative to the S&P 500, breaking topside, consolidating, and moving higher above a rising 200-day moving average. RSI of the ratio solidly in bullish ranges and moving higher. And the absolute trend, XLK, pretty much textbook uptrend. Why do we think that's likely to continue? Because the ETF rating is very bullish at Chaikin Analytics. 24 bullish stocks for 4 bearish stocks. Weight of the evidence supports tech continuing to be an outperformer, right? If all of a sudden tech started to look like this, we would no longer like it. But tech is moving up and to the right on an absolute and a relative basis, and we think the odds favor that trend continuing, so we're going to stick with tech. We're going to continue to look for ideas within the hardware space, the semiconductor space, and the software space, the same way we've been doing for months now. Tech, leading area of the market. And the fins are new leadership, right? We've been talking about the financials for a little while now. Here's XLF relative to the S&P 500, moving higher. Retest of a breakout and holding. Very bullish Chaikin Power Gauge ETF rating for the XLF with 33 bullish stocks for 3 bearish stocks. Ratio is holding in bullish ranges, so a momentum confirmation as XLF rides a nice steady uptrend on an absolute basis. As interest rates have moved higher, the financials have started to participate and actually outperform. Again, just to reiterate, we like tech, we like fins, we like healthcare. That's going to wrap it up for today. Head over to chaikinanalytics.com/today. Sign up for that free email. A lot of this content comes out of that email. We give you daily stock ideas. I hope you have a great day. I'll be back tomorrow.